Friday. It's going to be a big market mover. The GDP ended up being a pretty good market mover too, as well, as shown by what happened in the dollar on Friday. Expectations were pretty low for the GDP, came in hotter than the market thought, but look at where we are, everybody. What was a big number I talked about for well over a month or so here before the breakdown was 98.50, 98.50, 98.50. Look at where we're at. So classically, you get back to a previous breakdown, it's an opportunity to sell into. So I'm going to go with that, although I want to be flat before the NFP. Last week we were working alongside of Euro, worked a few different times before Friday. Thought that might have been it. And as you recall last week, I said we're just going to take it a step at a time, not look for any massive moves. We caught a nice dollar rally, the first big part of it, by being short the euro up around 113.5 or so, down towards 110. So here we are in the dollar index now, back to a breakdown. The way I see it now is I do believe eventually we are going to take out these highs at 100 and head to above 100 to 102.5, 103. Let's just take a look at the weekly chart to show you what I mean, and then we'll get a little bit more actionable, but I just want to give you the big picture on this here. And a couple of possibilities on how we get there. But I do believe that we're going to take out this flat. Here we are. Take out this flat top at 100. A lot of people would call this an ascending triangle. You have a flat double top here. There you go. And you know there are a lot of people that have been bearish the dollar for quite some time now. Looking at this double top. I'm not a big believer in double tops. I'm more a believer, to me this almost looks like a wave 4, and what wave 4s imply is one more thrust to new highs. So I think before we have the big short, just like the movie that was nominated in the Oscars, The Big Short, I haven't seen it yet, I want to go see it. I also recommend as a trader that you rent the movie The Martian, because it will give you a sense of what it takes to be a trader. Shows the persistence of problem solving and survival on a planet, which is a metaphor for what we have to go through in trading, to come through adversity, to learn our discipline, and to solve problems in the market. So that's a movie recommendation from me. It's my first movie recommendation at RoboForex.com. The Martian with Matt Damon. But the big short, in my view, doesn't happen until we clean out every last dollar bear, and you know that they're going to throw in the towel above this double top. Everyone that's been following me here for the last few years knows that Mr. Market, in my view, is a very mean man or entity, and markets will shake out as many participants as possible before the move they're looking for happens. Then most likely without them, because they've taken losses and fear takes over and they lose their confidence to go with their idea. So although we're looking for that eventually, I think there are a couple of different courses that we can take on this move in the dollar. But as I said, that's my macro view on the Dixie. Looks like I'm having a little trouble with this here. I want to get to this euro pound, but I just want to show you the weekly because it's important, because that's where you're going to have the huge short, and I want to show you why people are thinking this. So also people know that I thought that the S&Ps were going to do what they have done. But even the S&Ps, and that's another reason why I think there could be a pullback in the dollar. I do think the S&Ps are going to pull back. I'm having some issues with this particular website. So let me go to another one that I use. So I do pay attention to other things besides just the instruments that we trade. Maybe I'm having a computer issue here. So we'll skip the outside markets for today because there's a lot of important things to talk about. So here we were last Wednesday on Euro Pound, and I said 79.50 outside shot of 80, but that we had a third drive developing. Third drive to me looks like it's manifested. Can it rally one more time towards 80? Sure, but that would make it an even better short. If that possibility happened, it's also possible this was it. I see, next major support level around 77. But the key point here is if we're topping in Euro Pound, that too goes along with the bull case in the dollar. So down here, people thought I was crazy, not looking for new lows. I was open to the possibility that we could trade for a third drive. Didn't happen. Had a neckline here. We've reached targets. Here's your neckline. Measured move targets reached. 200 week moving average hit. So at the minimum, I would think that now we could get a pullback even back towards the breakout level. So just fib corrections in here. And this has implications which are a bit different, because if Euro Pound's going to start moving down, your preferred long is going to be the pound rather than the euro. So here we go, around halfway back is going to take you to the breakdown, and 61.8 is going to be all the way down to 73.43. So I think this is significant in Euro Pound that we did put in the top on the 3 drive to a top formation, and that I'd be selling rips instead of buying dips. If we're fortunate enough into later next week for another high to develop here in Euro Pound, it would just diverge once again up near that 80 level. But for now, I'd be looking at this as being a topping formation for a pretty big correction. So far, it's just ABC with a flat top. So if you missed it and you see one more marginal new high, you could go ahead and probe this short side Euro Pound because of the daily divergence on a 3 drive to a top formation, and believe that we're going to head back towards this horizontal old resistance support level down the road. Give me a Y if you're with me on Euro Pound. So if the Euro Pound is going to head down, and it's not going to do it all at once, it may even have one more jiggle to the upside. But what that does is it makes the pound your preferred long. And if you look at the pound right here, even though we are going to take 135 into account, the 2008 lows, this is not a market that I want to be short anymore. Here's your 4-hour look, pretty glaring divergence. Here's your 1-hour look, pretty glaring divergence going all the way back here. So are we going to probe it for one more low back down to the 3rd drive line? Possible. To me, that's a buying opportunity, because I believe if I'm right about a correction, at least a move back down to 96.5 in the Dixie, that the pound has a chance to see 141 before we head down to 135. Here's 141 again, comes in at 141. The most I could see the pound, since I don't think this is going to be the major top in the market, the most I could see the pound rallying back to would be previous support. It's going to be massive resistance, 41 initially, and maybe we have 2.5 in it, which would be a fib retrace. But we were working the short side of the pound for a long time, for several weeks, selling every rally. Our stops never got hit. Talked about starting to take profits under 140. So far now, I believe that we're starting to see divergences. We didn't have them all the way down until the action over the last 48 hours. Same on the hourly. This was our first divergence down here. Last week, Monday, I said that's not the low because we have a confirmed low. We'll see another one. We did get another one. It didn't confirm. And we even had one more marginal low with the RSI reading pretty much well above 30 at 37. So looking for at least on a correction in the dollar 141 to 142 in pound dollar over the coming days. Perhaps it could accomplish it before the NFP. We'll see. The Euro USD, because of the Euro pound looking weaker, is not the preferred long, but even the Euro here is beginning to diverge on the 1 hour. We're 61.8 back of this whole run right here into some major support. And though I do believe that it's possible down the road when the dollar's breaking out above 100, we're going to take out these lows in the Dixie. My view would be that we get some type of correction of this recent decline. How we were advised last week was we had the long from here. And I said buy the pullback to 980. Looking for 111. We didn't quite achieve the 111. So on both of these trades, there was 80 plus pips, 80 plus pips. And the way I handled it is I thought 940 was going to be a breakout right here. So here's your classic move. So you have a breakout here and it measured up to 111, but we negated the breakout the same day. So it was a false breakout. So if you bought it here, you made money. If you bought it here, you should not have lost money. Okay, at my 980, 990 level here. On all of my trading suggestions, I say between 50 and 100 pips to take half your position off and pull your stop at least back to break even. So they were both winners. I wasn't prepared for this break. This is really the GDP number. I was flat into the GDP number. Haven't decided to bottom pick it yet. The pound's my preferred long over euro based upon the fact that the EG looks like it has turned. But if you see the euro back in here at 875 above 880, back in, it looks like a falling wedge with a throw over, then the potential for the euro to have some type of rally also will manifest. Initially, I think we could look back towards old supports, new resistance. So the 980 level is going to be an important level. I just cannot get short euro here. I don't think the Dixie's just going to blow off to new highs without a pullback. So I'd be looking for reversals, although the technical condition of the pound is much better. Look at the RSI here at recent lows in the pound, way above 30. That's on the 1 hour. In the euro, barely hanging on to 30. So when you look at the RSI structure of both markets, which one's stronger? This or this? This, which is pressing the lows, trying to hold, or this that has already advanced off the lows with the divergence at the 37 level. Doesn't mean that we can't try the 3 drive line one more time, but I would expect potential pullbacks to hold here at this 50-day right here, 38.75. Tomorrow the off 38.53 could be a good number to try with a 100 pip stop. That's a 2-day off number at 38.53. Right here, I just count back 2 candles. So today the off number was 139.60. That's not going to happen, but a 2 close reversal tomorrow will be above 38.70. So 38.70 could be a decent area to try something. That's probably right around here, the 21 EMA with stops underneath the wedge line. I would have it under the 138 level. Initially looking for targets up towards 141 on a dollar pullback. Hopefully we can accomplish this pre-NFP. Give me a Y if you're with me. So looking for a dollar pullback, but in this case the pound may outperform because of what I went over on EG. Looking like it's going to be a top, due for at least some type of fib correction here. 38% comes in right around the 77 level. So there's at least another 100 pips before we get into some more significant support. Here you go again. You have confluence here at the 23% level and the 200 on the 4. So that's where I think euro pound is going to before we see any kind of bounce. Under 77, the market's got problems. Give me a Y if you're with me. So pound preferred long over euro, as euro pound looks like it's heading at least down to the 77 level. So this was the best advice because, like I say, avoiding bad trades is more important than new trades. And here we were on Wednesday, right? Wednesday, Thursday, Friday. And I went out and pounded the table and said, do not short the yen here. In fact, I was going to be prepared to buy the yen going into next week, but it turned on that day. We were talking here at 111. So that saved you a lot of money because a lot of people were looking for this breakdown under 111 and that we would head back down towards 109, and I think it's possible. Today's a bit of a negative day, and I do think eventually we are going to take out these lows. But before it's over, we could have another rally attempt back towards 115. 116 would be a natural test of a breakdown. That too is possible. But this not only told me not to be short the yen, but I said also to not be short crosses anymore, that the euro had gotten to our target and that it could rally back to 25. Look at that, 25. Now we're all the way back here. If you took the short at 25, congratulations to you. Again, of the crosses I follow, euro yen's the weakest. I don't think it's done going down. The one that I recommended buying on a pullback was the Aussie yen, which we finally got to in this level here, thinking that there's at least this from here. So like this long Aussie yen position, I talked about it from about 80.40, 80.50. So you could use break-even stops right now. Low was 80.30. So if you're in around that level, you want to be careful, because if we start taking this out, which is more than 61.8, I think we're at 78.6 here, but compared to the other crosses, it's held up the best. Also said to cover the guppy. So we're trading right around the 61.8 level, and I'm thinking that there's potentially another move to the upside. Looks like we could have some type of ascending triangle. There's your ascending line. Here's your flat top right here. So it's a pretty nice formation. Call it 80, 82. That eventually, as long as we hold this on a closing basis, hold the 80 on a closing basis, you know, we'll find some resistance up here, and that this formation measures up towards 86. So 86 is all the way back to checking out these lows. Looks like it was just a two driver here. Dollar pulls back, maybe we get this move in the Aussie yen. Guppy also had a nice little bounce here off this 154 level. Way off its lows compared to the euro yen. Look how much we're off the lows here in the guppy compared to the euro, into a full-blown retest compared to an Aussie yen. way off the lows and holding the 61.8% retrace. So relative strength rankings would have the Aussie yen as a strength, followed by the guppy, followed by Euro yen. So should have saved you a lot of pips because a lot of people were still bearish yen, bearish crosses, and not that we weren't, but you know, bulls and bears make money and pigs don't. So we had some reasons to cover shorts there in the last week or so, waiting for bounces, and we got one in Euro yen. If you took the short, I said we could go back to 25. You may have even taken the long looking for 25, and then reshorted it at 25. So Aussie yen, nice looking triangle. We'll see how this pans out. Take a picture. So let's look at the commodity currencies. The crude got strong last week, and this looks like a pretty negative breakdown. You know, I never got the rally I was looking for to short Canada, and I never got this 61.8% retrace. You know, had this as a breakdown. Crude still not doing anything wrong. Probably headed towards the 132 level. But I have a hard time shorting something that's beginning to diverge, and I have a hard time getting short Canada here. I'd like to see some type of rally. In fact, I'd almost lean towards we're starting to get some divergences here towards at least a recovery back to the breakdown that could take us to 680. Maybe we get one more low. As you can see, they're not confirming now. So maybe this was it. One more low, and then at least a recovery back to the breakdown, which was right here, the 36.30, right here. So this is really going to be the demarcation line. I can't start getting positive USD CAD until we start closing back above this breakdown at 36.40. Give me a Y if you're with me. Kiwi looks weak to me. All right, it's kind of the opposite. I showed this triangle here. You know, we rallied back to it. We're coming off it. I think we at least test this 64 level. Probably a couple hundred pips to the downside here in the Kiwi. It actually looks like it left a gap. So any rallies back towards 6.5, I think should be shorted. We have confirmed lows on the 1 hour. Looks pretty negative, much more negative than the Aussie, which is something else that I talked about 2 months ago, liking the long side. This was a position trade that I talked about on the Aussie Kiwi, liking the long side of Aussie Kiwi, saying that we could be building the right shoulder here on the weekly. Here's your left, here's your head, and now we're building this right shoulder, putting in higher lows. I still prefer the long side of Aussie Kiwi. So we talked about it down here. So this is a long base. Something I was taught by a pro trader, a floor trader, is that markets bottom in silence. Okay, they're pretty quiet, things like saucer bottoms, right? And then they top in violence, which is something that you're seeing, for example, wild swings that you have before the market begins to sell off. So that's why we may have some wild swings in euro pound, because markets bottom in silence and they top in violence. So looking for some violent action in euro pound. The Aussie, USD, doesn't look like it updated to me. There we go. To me, it looks like we're, you know, headed headed lower in the Aussie, which, you know, doesn't make sense for the Aussie yen, but maybe there's a pullback, but the action still is pretty good in Aussie. I'd buy pullbacks back towards 70 if offered, 69.80. Again, kind of a flat double top. This isn't the kind of market that I think is going to top, so maybe we work down here if the dollar's strong for another day or so to 70.70. But to me, it looks like we're setting up some type of, this may be a head, and this could be a neckline. And even though I think gold could come off, someone actually schooled me that basic materials like iron ore are even more important for the Aussie. So looking at this, maybe this is dry, this is a little flag and we get one more shot down, but as I begin to look at this, it has a more positive view. If you want to be conservative, and there's nothing wrong with that, you could just wait for a breakout over 72.5. I like to try and get some leads on it, and we get back over 72.5. I think that there's a possibility that we could see this market rally back towards this level. There's 73.5. 75 would be a natural. Look how long we held the support level. So I'd be looking to buy breaks in Aussie that maybe we get while we're getting a pullback in the dollar. The Aussie could make a move back up toward the 73.5 and then 75. Here's one drive, here's two. So if someone puts a gun to my head, I believe I have to favor the long side of the Aussie here. Euro Aussie was something I was looking at. Said I liked it. I believe it was in here. Looks like we're going to get another low here in Euro Aussie. And based upon EG, I'm just neutral here. Doesn't look great to me. Doesn't look terrible. There is some divergences beginning to happen here, new lows. There might be something counter trend here, but I think I'm just going to leave it alone. I thought that we were going to get some type of bounce off this neckline, and we're sitting right on it and could be on the verge of breaking down. I thought we might get some type of rally to take us back towards this 157 area. So this is kind of a break BE trade. I would just step aside and see what develops, see if we're going to break down. I don't know what to do here, but I would know what to do up here, and need more evidence before I go into it. I can't get short here because at new lows we're going to be diverging, even though it looks like a breakdown. Give me a Y if you're with me. But the major point is the shift that I thought could happen in Euro Pound up at the weekly objectives off the head and shoulders bottom. The 200 week moving average is happening. And because of that, our preferred long is going to be in the pound dollar. Look to buy some pullbacks in the pound. I'm looking for recovery to 141, 142. And I'd be careful being short Euro. This thing could get back inside this wedge back over 108.90. And if I'm right about the dollar, which is predicated upon the S&Ps not blowing the new highs, and again, from the beginning of the webinar, eventually I do believe the dollar is going to take out that double top. But at the minimum, I think there's at least a pullback in the dollar that will take one step at a time and see what we can accomplish before a red event, which I advise people being flat by Friday morning prior to the NFP here in the US. Any questions on anything I've covered here today? Major point being the Euro Pound put in that turn that I was talking about on last Wednesday. It's manifesting. So we're going to go with that being the compelling evidence for trade selection. And trade selection favors cable, which has been decimated over the last few weeks. In fact, crude not looking bad either. Thought it could rally back towards 38. They turned it back from 35. Could still go to 38, and believe it or not, they're starting to treat the pound as a petrocurrency in some ways. It's starting to follow the crude a little bit. And also the big deal hanging over it, it's a Brexit. I don't think there'll be one. So thank you everyone for your attention today. Any questions on anything I've covered? How about on anything I haven't? Okay, very well. So let's see how some of these things work out. And I'll be back with you on Wednesday. Good hunting the rest of the day. And thank you for your attention. See you Wednesday.